Get in the management of Escorts really to talk about how the numbers could look like, or how the numbers have been, and what the outlook ahead could be for Escorts. Mr. Bharat Madan, who is the Group Financial Controller at Escorts, joins us right now on the show. Good having you, Mr. Madan. Thanks so much for joining in. I have to admit, irrespective of what the stock has done, that the quarter has been rather good for you. Both the revenues 26% higher, better than what you did in quarter one, obviously, so which was 11% growth. But the operational performance has been rather spectacular. What's led to this?
I think one of the key reasons, like you mentioned, was the operating leverage. With the higher volumes, I think the highest share volume I think we ever done in the company in a quarter. So that's one of the key reasons, besides the cost initiative that the company has undertaken. So I think both the factors combined had this impact, which is very positive for this quarter results.
Is in your hands, Mr. Madan, is of course the cost control initiatives that you would have. I think revenues would be a factor of how this quarter goes by. My question to you would be, what you've done in this quarter gone by, is this something that you can reenact? Would the GST, would the demonetization base and the extension of the festive season, or the spilling over of the festive season into October, work in the O&D quarter as well?
I think it depends on how the...
Oops, I think we've just lost Mr. Bharat Madan. We're going, of course, try him again. But yeah, this is one conversation that we can't miss, really. Interesting. He's talking about both the revenue run rate moving up and the fact that they've initiated cost control leading to this big surge. For the benefit of our viewers who are tuning in right now, while the stock has done what it has done, here are the numbers. Revenues up 26% at 1212 crores. EBITDA up 109%. At 141 crores, and net profit up 149% at 77 crores, with the margins coming in at 11.6%. So it's a big jump both on the revenue profit as well as the EBITDA front. We'll wait and watch as to what they have to say for the quarters ahead. Escorts.
I remember, Niraj, you spotted the stock yesterday when it touched its all-time high levels. It was up almost 5%, and
yeah.
I think what one saw today was a bit of profit booking. In fact, today also it did touch its fresh highs, but post that there was some sort of profit booking which came about. Though the numbers look really good, very good operating performance that one has to see. I think if we connect back, we'll definitely check what was the volume growth in the tractor side.
Yeah.
That's going to be a very important number for Escorts.
Also, you know, this note says, I mean, they witnessed a decline. Okay, we do have Mr. Madan, so we'll talk about our thoughts in a bit. But Mr. Madan, sorry, you were just beginning to answer about whether what you've done in quarter two could be reenacted of sorts in quarter three because of a low base as well, I presume.
Yeah, so I think another key like the reason is obviously the performance of the industry behaves in Q3 will, I think, depend a lot really in terms of getting those operating leverages back in the performance. But having said that, I think one of the key, issue which I think has not been highlighted so far is, I think in this quarter in Q2, we have also taken a one-time effect of about 26 crores, which is the GST transition impact on the stock lying with the manufacturers as well as with our channel. So that's one of the other reason I think which has impacted the performance in Q2, in spite of giving the very best performance in the numbers. Still, there's some impact which has been built in. So I think going forward, those impacts will not be there. So even if the volumes really do not happen the way I think we expected this Q2 volumes to really go through. So still I think the performance wise, I think we should be able to deliver a good set of numbers going.
Yeah, for sure. No, I mean, even with that impact, I mean, if the numbers are looking so good, then I'm sure it would have looked even better without it. Couple of thoughts. I'm sure Navneet and Pradeep have questions, but I just have one small question really. Your market share in domestic tractors, I think due to deferrals of sales due to GST in the last quarter had dipped a little bit. What is your current market share, and would you presume it will go up in the times to come?
So in the first quarter, we had a dip, like you mentioned, about because of GST and the sales deferrals. We ended up with about 9.7% market share in first quarter. But in this quarter, we've been able to up it by about 1%. So now it's 10.7% as we speak today.
Mr. Madan, if you could give us exact numbers, what was the volume growth in on the tractor side?
So tractor volumes have gone up by about 30% in this quarter.
Okay.
So that's one of the reasons. And on the construction side, again, I think we had a 34% growth in the volumes. So I think both the sectors have done well. And same way in railway segment also, we're seeing a pretty good growth rate this time. And the margin expansion has been pretty good in railway. And we're sitting on a very strong order book again on the railway side.
I was just coming to the railway equipment side. I can see the EBIT has seen a sharp jump, in fact, for this quarter. I know this doesn't contribute a lot to your bottom line, but still 12 crore versus 6 crore, which was seen in the first quarter. Any specific reason, or these are just the new orders that you're executing?
I think the first quarter was an exception because we have been in the normal EBIT margin range of about 13-14% in the railway business. But the first quarter we had a very adverse product mix. That's the reason in the first quarter we had a very low margin. But now we are back with the same order book. The mix has actually improved. We've got a very strong order book now. And we expect going forward we should be continue to be in the same 15, 16, 17% sort of EBIT margin in this business.
Mr. Madan, if you could tell us whether the sales momentum has really sustained in the month of October.
So October obviously is expected there will be some slowdown because we don't expect the industry to really show a similar performance because September there are a lot of stock building which happened in anticipation of a good Diwali season. But now in October compared to last year where both the festivals were actually in the same month. So we don't expect the retails will be as strong as in last year. So you may more or less a flattish industry or maybe some slight degrowth in October. But having said that, in November, December, last year we had demonetization impact which had affected the retail sales, so that should get made up. So overall, probably look at maybe it's a flat quarter or maybe somewhere anywhere between plus minus 5% here and there, and that's a growth. But Q4 can be again a strong growth back in the business.
Okay, just one quick question. You consistently been improving your construction equipment EBIT margins to negative 2.1 last quarter. I presume it is positive this time around. Is this a trajectory that would continue, and any thoughts on where it could reach to over the course of the next maybe 4 odd quarters or 6 odd quarters?
So we had given a guidance earlier on construction side that in H2 we should be able to break even or make some positive margin. But this time I think we've been able to do it in the Q2 itself. So definitely H2 is a better season month for the construction equipment business, and we expect the volumes to be even higher compared to what we have done in the H1. And the margins will also improve. So I think in the next 4 to 6 quarters, our expectation is the margins will become positive. It will be anywhere between the range of 3 to 4% sort of EBIT. So it will not be very high, but I think still looking at the past what we had in this business, so which we've been able to turn it around now. So it should remain in black.
Okay. So my last question, sir. Maybe other two my fellow colleagues have maybe a question or two more, but if I understood you correctly, maybe October could be a slightly tough month for the tractor industry at large. But would the low base in November and December make up for that? Would we see a comfortable October, November, December quarter from where you are sitting right now? Can you foresee that?
Yeah, so like you said, in October, shortfall can get made up in November and December. But overall for the quarter, we don't expect to see very sharp growth rate what we have seen in the first 6 months of this year. So at best, it can be a flat quarter in terms of growth or maybe plus minus 5% here and there. But Q4 again can be a very strong growth quarter with about anywhere between 15% sort of growth, which is possible in Q4. So overall for the full year for the tractor industry, we still expect I think it will deliver somewhere between 12 to 14% growth on a full year basis.
Right. Mr. Madan, so far it's been a great financial year for you. Last year in FY17, you clocked overall profit of 160 crore. If I look at the first half, you've already done 140 crores. What are the numbers that you're working with the second half of this year then?
Well, I can't disclose the numbers, but obviously the internal targets are steep. So definitely, if you've seen the 6 months performance, and we expect, I think if we're able to repeat the similar numbers probably for next year, for the next 6 months. So that's the target I think we're working on. And a lot will again depend upon the industry, how the industry behaves. If we're able to get those sort of volumes to be achieved in H1, so definitely I think our operating leverage will play.
Shareholders are certainly very happy, Mr. Madan. You've been doing a fabulous job. Thanks so much for taking the time out. Congratulations. And keep up the good work, and thanks for speaking to Bloomberg Quint.
Thanks a lot. Thanks for that.
Well, that's Bharat Madan of Escorts, and pretty candid. I thought, amongst other things, pretty candid. Didn't riff-raff around the fact that, oh, we'll see what will happen in O&D. He was quite candid to mention that October might be a bit soft, and while November and December will have a low base effect, it's not that it will set the stage on fire. Avinash, what did you make of the conversation? And what should one do if you either have the stock or if you want to buy the stock?
No, I think Niraj, clearly, since he's clearly mentioned that October, November, December could be a slightly flattish kind of quarter, My sense is I think the markets are penciling a 13-14% annual growth, and on a 1 year quarter basis, I don't think this stock is going to be derated. In terms of the operating leverage, he clearly mentioned that the benefits have flowed in this quarter, and I would believe that the markets would obviously consider the fact that if the third quarter is more or less flattish in terms of numbers, at least the fourth quarter would make up for that flattish performance. So I would believe that any decline, if it does come, should be used as an opportunity to buy the stock. I think clearly we could be seeing better numbers even in FY19. This company has definitely a lot of capacity which it currently has not utilized, and probably we could see the full utilization happening in FY19. So I think good going, at least for the next 12 months.
All right, so that's the view coming in on Escorts. A good quarter for the company, and the stock was also trading at its lifetime highs, though there was some bit of profit booking which came in today.